Welcome back to the channel. Today, we're diving deep into Healthier Choices Management Corporation, ticker symbol HCMC. Whether you're a long-term investor, a penny stock enthusiast, or just curious about what's happening with this unique microcap company, this video will break down HCMC's latest news, financials, business model, and what the future might hold for the stock. Settle in because we're going to give you a comprehensive 18-minute update on everything HCMC. Let's start with the basics. Healthier Choices Management Corporation, or HCMC, is a diversified holding company operating in two main segments, grocery and vapor. On the grocery side, HCMC owns and operates several health-focused retail stores in the United States. These include Ada's Natural Market and Paradise Health and Nutrition, which offer everything from fresh produce, bulk foods and vitamins to deli items, baked goods, and natural household products. They also run Mother Earth's Storehouse and Elwood Thompson's, both well known for organic and health foods, supplements, and vitamins. Additionally, Green's Natural Foods is part of their portfolio, offering organic produce, non-GMO groceries, juice bars, and a wide range of local products. On the vapor side, HCMC has developed and markets Q-Unit and Q-Cup technology, which are products allowing consumers to vape concentrates either for medicinal or recreational purposes. They also run the vitaminstore.com, an online platform for vitamins, supplements, and health and beauty products. HCMC is headquartered in Hollywood, Florida, and has positioned itself as a player in the health and wellness retail space, as well as the vapor technology market. This diversification is important because it gives the company multiple avenues for growth, even as the broader economic environment remains challenging for small-cap and micro-cap stocks. Now, let's talk about the stock performance. HCMC is traded on the OTC markets, which is typical for companies of its size and market cap. The stock price has been extremely low, often trading at fractions of a cent. For example, recent trading data shows that the stock has a massive volume, tens of millions of shares traded daily, but the price remains at or near zero, reflecting both the high risk and speculative nature of this investment. The company's market capitalization is also very small, with some recent reports putting it under $500,000. This makes HCMC a true penny stock, and it's important for investors to understand that these types of stocks can be highly volatile, illiquid, and subject to rapid swings based on news or speculation. Financially, HCMC faces significant challenges. The company's net income is negative, with a recent report showing a net loss of over $8 million and a net profit margin that is deeply negative. Total liabilities are high relative to the company's assets, and the price-to-earnings ratio is effectively zero, reflecting the lack of profitability. On a price-to-book and price-to-sales basis, HCMC is also trading well below sector averages, which can be interpreted as the market pricing in significant risk or a lack of confidence in the company's near-term prospects. The company's grocery segment, in particular, benefits from ongoing consumer interest in health and wellness, organic foods, and supplements. One area that has drawn attention in the past is HCMC's legal strategy. The company previously made headlines with high-profile patent litigation, particularly against larger companies in the vaping and tobacco space. While these lawsuits generated a lot of buzz and speculative trading activity, they have not yet resulted in significant financial windfalls for HCMC. Investors should be cautious about pinning hopes on legal settlements or judgments, as these are often unpredictable and can take years to resolve. Let's shift gears and talk about trading activity. HCMC is popular among retail traders, especially those using commission-free platforms that allow for fractional share purchases and high-frequency trading. The stock's low price and high volume make it attractive for day traders and those looking for quick gains, but this also means that price swings can be exaggerated by relatively small trades. Liquidity is a double-edged sword. While it's easy to buy and sell shares, the lack of institutional ownership and analyst coverage means there's less stability and fewer checks on volatility. Speaking of analysts, there is very little formal coverage of HCMC. Most major financial institutions and research firms do not provide price targets or earnings estimates for the company, and there are no consensus ratings to guide investors. This lack of coverage is typical for microcap stocks, But it also means that investors need to do their own homework and be extra cautious about relying on rumors or message board speculation. Let's look at some key metrics. According to recent data, Hcmc's price-to-earnings ratio is 0, compared to a sector average of 23.5. The PEG ratio is 0.07, and the price-to-book ratio is negative at -0.9x, compared to sector averages of 0.9x to 1.5x. The price-to-sales ratio is also 0, indicating that the market is not assigning much value to current revenues. These numbers reflect the company's ongoing losses and the market's skepticism about its ability to turn things around. On the upside, Hcmc's focus on health and wellness retail gives it some insulation from broader economic downturns, as consumers continue to prioritize healthy living and organic foods. The company's online vitamin and supplement business also provides a potential growth avenue, especially as e-commerce continues to grow in the health sector. Now, let's talk about risks and opportunities. The biggest risk for Hcmc is its ongoing lack of profitability and the challenge of operating in highly competitive markets. The grocery segment faces competition from much larger chains and online retailers, while the vapor segment is subject to regulatory uncertainty and shifting consumer preferences. The company's high liabilities and negative net income mean that it will need to either grow revenues significantly or find ways to cut costs in order to survive long-term. On the opportunity side, Hcmc's diversified business model means that it's not reliant on a single revenue stream. If the company can successfully grow its health and wellness retail footprint, expand its online sales, or capitalize on new trends in the vapor market, there is potential for upside. However, this will require strong execution and possibly additional capital, which could mean further dilution for shareholders if new shares are issued to raise funds. Let's also touch on market sentiment. Hcmc is a favorite among certain online trading communities, and it's not uncommon to see spikes in volume and price following social media campaigns or speculative news. While this can create short-term trading opportunities, it also adds to the volatility and risk. Investors should be wary of hype and focus on the fundamentals when making decisions. Looking ahead, what should investors watch for with Hcmc? First, keep an eye on any updates regarding the company's financial health, including quarterly earnings reports and balance sheet updates. Thanks for watching. If you found this video helpful, please like, subscribe, and hit the notification bell so you don't miss our next update. Drop your thoughts and questions in the comments below. Are you bullish on Hcmc, or do you think the risks outweigh the rewards? Let's discuss. See you in the next video.